Now let us discuss the definition of the audit. So here comes the definition. Okay, audit is systematic. Audit is systematic, independent examination of financial statements with ultimate objective to give opinion whether these financial statements give true and fair review, irrespective of legal form, whether profit oriented or not. And now let us break down the definition and see in detail what it does mean. Okay, why is audit called a systematic way? It is called a systematic way because what has to be done in audit is said in standards on auditing in step by step procedure. If procedure was laid in standards on auditing, it describes how an auditor should act and what are the steps and what is the sequence that an auditor must follow to ensure that audit is done properly. So by that we can say that it was a systematic procedure. Nice. And independent. What does independence mean? A person who is doing the audit has to be independent to the company. He should not be related to the company legally, financially, or personally. What does that mean? Legally, he should not be answerable to the person. I mean, he should not be answerable to the company or otherwise. I mean, example, he should not be the employee of the company or he should not be the subsidiary of the company. Okay, that is what it means. And he should not take loan from the entity. So thereby he can be financially independent, and personally he should not be a relative of the company. These are some examples of in which he can remain independent. And furthermore, has discussed in section 141 of Companies Act. And what does an auditor do in general? He examines the financial statements. How does he examine? He checks whatever the financial statements say, he checks it with an evidence. For example, see rent as in financial statements was 2 lakhs per month. And how does the auditor verify the rent of rupees 2 lakhs per month? Visualize this, how a transaction flows from starting to the end. So thereby you can have an idea on what are the evidences that you can ask the management. For example, rent. You are saying a rent of rupees 2 lakhs per month in the financial statements. So the net rent for the year would be around 24 lakhs or something as such. Okay, you have seen that. And what is your way of checking that rent? You would be visualizing. So the company or the organization is in need of a rental premises. So it would ask for quotations. That's the step one. You will get the reply. Next, the company management would be visiting the premises. So there would be an inspection document or something as such, and who have visited, and all the expenses related proof evidences would also be there. Okay, that's the step 2. Inspection would be there. And third one, if you are fine, if you are okay, if the management is okay with the premises, they would enter into a rental agreement. That the third. And generally and primarily, or more than 95% of the premises, if it is office related, would surely have a rental deposit. So, and the rental deposit amount would be as said in rental agreement. So you can cross verify that. And every month you would be getting a rental slip or invoice from the person who is giving you the premises for rent. And you can check in the bank statement too by confirming the details of the person who is giving the premises. And you can see the TDS, whether the TDS has been deducted or not. This is very, very important thing. And you can compare the rental amount of the premises that is surrounding your building, that is surrounding your rental premises. And rent graph should be horizontal. Why am I saying that? Because rent doesn't change just like that. For a year it remains same unless there was increase or decrease in the rental premises. either you might have taken a new premises on rental basis, or you have really left a building. Only on those situations you can see that the rent only on these situations you can see there was a change in rental graph. Okay, you have to have a clarity on the process, the flow of the transaction. Only then you can identify what are the documents that you can procure. You should get at least an idea on what are the documents that you should ask for management. Only if you have idea on the process of the transaction, then you can ask. Getting those documents is another thing. What you should ask, you will be getting to only when you know the flow of the transaction. So let us come back to the definition. So he checks the financial statements based on an evidence. So and he has the and his ultimate objective is to give opinion. Why is he giving only an opinion? Why can't he give guarantee? You cannot give a guarantee where judgments are involved. This is the first step. This is the primary thing. Judgment changes from person to person. Judgment changes from person to person, and they never be the same. So you can only give an opinion. And what are the things that come the auditor to give only an opinion? Or he has limited resources. With limited amount and limited people, he should be able to give opinion. The organization is working for 12 months throughout the year to prepare financial statements, and the auditor is given 1 or 2 months only to comment upon that data which was prepared over 12 months by 200-300 people, for suppose say in big enterprises like Tantra Enterprises or something as such. So he was supposed to give a report saying that it was true or unfair, fair view, true and fair, based on very limited people and very limited resources. Finance, money. Okay, he should remain profitable for the assignment. So he cannot spend an entire huge amount, and he cannot deploy entire team of 300-400 people just to verify this. This is not possible. And since management has prepared it, you never know the intention of the management. And if they deliberately give you false evidences and false documentation, you cannot prove. A document which is not related to government is very, very difficult to know the status, whether it is true or correct. You cannot say that. You have to blindly follow on the management, and the intention of management might be to do fraud. So you cannot say that. You cannot give a guarantee on whatever the management is saying. So you would be giving only opinion that the financial statements can be true and fair. What does true and fair means? True means true. Reality. That's the reality. And fair means the financial statements that are prepared has to be prepared as per accounting standard, as per accounting norms, and the presentation has to be as per accounting norms, and the disclosure has also to be as per disclosure requirements. What does that mean? For example, here are the examples. Here you can see a machinery which has the value of rupees 30 crores in financial year 21-22 and has value of 45 crores in financial year 22-23. What does an investor generally think of this? There was a spike of rupees 50%, 15 crores. So an investor would think they have increased the capacity of the machinery, thereby their production would increase, thereby their profits would increase. This is what a person generally thinks. So he might invest. What actually has happened is they have revalued the asset. And they did not disclose the same in the notes to accounts, and eventually leading an investor to dump his money. The intention of the management may or may not be to may or may not be to actually disclose or not to disclose, but the non-disclosure has resulted in an investor taking a wrong decision, wrong conclusion. I mean, yeah. And let us go on to the next example. This is relating to sale and repurchase. I have sell goods of rupees 1 lakh and I have bought goods of rupees 1 lakh 5,000 after 6 months. What does this primarily look like? It looks like a sale and repurchase. But what actually has happened is he has taken loan of rupees 1 lakh and he has repaid the loan with interest of rupees 6,000 or 5,000 after 6 months. And the goods are security for the transaction. Why does he do that? Why does he record it as sale and repurchase? So he wants to avoid disclosure in Caro or something like that. That is the reason why, and also to increase the revenue for a small period of time. He might be doing this. And one more example would be how to black money example, and previous one was sale and repurchase example, revaluation example, black money generation example. So for say in private company there are very less investors in the private company, and they would not like to pay 30% of the income as taxes, so they would create fake bills, fake purchases, and the fake purchases would be not some other people from the investors itself, so they would be taking their profits without paying any taxes. So here the black money is generated to the investor. I mean, the black money is getting out of the enterprise. So in the same way, if the black money has to be reintroduced in the business, they can use a simple entry called as scrap sale to bring black money back into the books of accounts. To get out, they might use this first option where fake purchase or something like that. And I want to increase my expenditure. This is dividend versus debenture interest, and this is acceptable. What was this? I want to increase my expenditure. How do this is a less tax planning. I had a thought. My business needs rupees 1 crore, and I can procure the same in the form of 50% shares and 50% in the form of debentures, thereby saving tax expense on interest. This is tax planning. This is nothing wrong with this. So these are some examples of them. To give opinion on financial statements, whether they represent true and fair view of the transactions, okay, irrespective of legal form, and the objective of an auditor doesn't change based on partnership form, based on the legal form of the organization. It might be partnership form, sole proprietorship form, or LLP or company, whatever it may be. The auditor responsibility, the ultimate objective of the auditor remains same, whether it is profit oriented or not. It might even be a charitable institution, but the auditor's primary objective doesn't change at all. Doesn't even change. It remains the same. And here, thereby we are ending the concept number 1.3. That was the